Hello, good evening, and welcome to the Books Crypto Club um, crypto chat over virtual coffee or over Zoom, where members of the Crypto Club meet up every Sunday evening to have a chat about what's going on in the crypto world, what news there is, and what views they have on things. So today it's Sunday, the 7th of June 2020, and we'll see who comes and joins us shortly. If you enjoy this video, then as the YouTubers say, please subscribe, like, click on that notify bell or whatever rocks your boat. And I hope you enjoy the session. Let's see who joins us today. Hey, Anthony, good afternoon.
Right.
How are you?
I'm all right. I'm all right. How you doing?
Yeah, not too bad, thanks. It's, living in this crazy world of crypto, seeing all the prices going up and down and sideways and everything.
Yeah. I think we're still trying to get out of that. Trying to get over 10,000, aren't we? Just we keep getting battered down.
Yep. Yeah,
But
it certainly seems that way, that there's some sort of resistance or something going on around there, definitely.
yeah, yeah. It, I'm just seeing a lot more. Well, the fundamentals are still good, and I'm finding a lot more kind of interest. Grayscale kind of gathering quite a lot of BTC over and above what is being mined at the moment.
Okay.
Ethereum's done well over the last week or so, up to $236 now.
Okay. Yeah.
But yeah, there's a couple of outstanding ones, like crypto.com. Have you ever heard of crypto.com?
No. Tell me
Okay,
more.
so we've been doing a bit of an analysis around various different credit cards and crypto. And so you've got crypto.com, you've got Fold, and you've got Wirex,
Hmm.
all in the UK at the moment. From a UK point of view, obviously, crypto.com, the token has done incredibly well. And they're even start thinking of, they've got an exchange, they've got a wallet, they've got interest, they've got staking, and they are looking to add kind of a non-custodial solution to it all as well. So that crypto has been doing incredibly well.
Okay.
But yeah, I was just looking at the various different cards and the various different debit and credit cards, and it does seem that the majority of guys are are just, they've got the spending of crypto sorted. But Wirex, every time you spend offline, you get sats. So you get sats back, which is quite cool. Yeah, and I was just going through a few of these. So Wirex, Fold, and Crypto.com. They're pretty good kind of cashback type cards.
Okay. Yeah. Are you looking at what eToro's doing or anything as well?
I used to have an eToro account. I think I've still got some money on there.
Yeah.
Um,
They were in the press the other day about something, and someone was commenting about how they've seen a real growth in buying and selling of crypto through their markets, and it's something that kind of winds me up because they've got a phenomenal promotional platform, brand reputation, really well known and everything, but they don't actually let you buy and sell crypto. You buy and sell the rights of crypto, but not of crypto.
oh yeah. So
Yeah,
it's a
yeah,
custodial solution, and it's just derivatives of that crypto. Yeah.
exactly. But they seem to have been doing really well. And I know there was some problems. There's some talk about the banking facility or license or something in mainland Europe having a challenge a couple of months ago, and that kind of went quiet again. But it's horrible. At least they are promoting the whole crypto world and capability, which is good. And I
Mm.
wonder if they'll keep on developing their card offering as well and grow further.
Yeah, possibly. Obviously, if you pay for crypto on eToro, you can't transfer it out of there.
Mhm.
you kind of invest in external markets quite easily, like things like Tesla and US stocks as well. So if you did want to get exposure to, external markets, CTOR is pretty good,
Mhm.
but it's still a centralized service, obviously. Now, I'm also finding that a lot of cryptocurrencies are fast moving to staking and offering interest back, so that there's liquidity in their token and cryptocurrency. So
Okay.
a lot more companies are going down that route. Even blockchain.com, which has an okay wallet, yeah, and an exchange, but on the exchange you can start to earn 4.5% interest on your BTC.
Oh wow, I
That's
didn't know that, because blockchain.com is one of the ones I always recommend to people because it's pretty easy to use, and I've met the guys behind it. I've been to a couple of events that they presented at, and they've been UK based for quite a few years now, and they seem to actually have their heads switched on quite nicely, which is good. But I actually thought the wallet and everything was quite simple and easy to use, and probably one of the better ones out there.
It's very easy to use, but blockchain.com haven't introduced SegWit into the
Hmm.
wallet yet. So when transactions are quite expensive, which is a bit of a drawback. And nearly every wallet deals with SegWit now, except for blockchain wallet. So that's I think they're dragging their heels a little bit on that.
Yeah.
But it is
Do
a
you know
simple
what?
wallet.
Do you know why that would be or anything?
I'm not too sure actually. I think no. I just don't. I think they just haven't got around to it. They've been saying that they'll try to put SegWit into the wallet for a number of years and haven't managed it yet.
Okay. Mm. Oh,
I
but,
also heard that BitMEX is affecting the markets quite substantially, or at least they were about a week ago. BitMEX tend to roll up all of their Bitcoin transactions into one go and hit the hit the Bitcoin blockchain around about, was it 1 p.m. US time?
okay.
Something like that, and which then has a knock-on effect for transaction prices, because they push up the transaction prices, and then if you need to get into the next block or the following block, it pushes all the prices up because they fill a whole block up. So yeah, and they're not. I'm not too sure they're using some kind of script that is not that. It's not that short within the block. Yeah, I don't know. I don't know the word for it actually. It's getting a little bit technical, but they could upgrade the way that they pull transactions together, and they'll save thousands with just a bunch transactions, a batch transaction, and they don't bother. Mainly because they're probably getting too much money, and it's small beans compared with some of the other things they're working on. But it does create a little bit of um, bottleneck in the mempool, and that tends to clear overnight, US time. But from 1 p.m. Till kind of midnight, there are increasing fees on crypto because of BitMEX. So it's
Okay.
it's a strange one. It's a strange one.
Great, isn't it? How you still get these individual organizations having an effect on what's supposed to be a decentralized, distributed world, which kind of proves that it still isn't in
Yeah.
many ways. But that's
When
the
we
thing that keeps getting me about the whole DeFi movement as well.
mm,
That the whole thing that DeFi is meant to be decentralized finance, and when you look at how people are actually operating in it, it's actually typically connected with fiat, which means it's not a true DeFi type thing, and it's quite often being done by central players in some way. It's like, I think you're missing the point on this.
well, yes and no. So you've got places like Celsius that offer interest on your crypto and have one leg in the DeFi space with all the stable coins and one leg in the traditional space for onboarding and stuff like that.
Mhm.
You've got others that are fully DeFi, like Kyber Network, Synthetics, MakerDAO, although MakerDAO now have an element of centralization in their algorithm, which is USDC, which is the stable coin from Coinbase. So they have that in their algorithm to make sure it's pegged to $1. So there is an element of centralization in there.
Okay.
But what I'm finding really interesting is not only are companies starting to look at the DeFi space as a space to play and gain efficiency, especially with simple kind of reconciliation or checking activities, validation activities. But there's a lot more interest going into DeFi from a number of different areas, and they're more or less creating the same financial instruments that we have in the traditional space, but on DeFi. I think it's going to blow up. I think it's going to be massive, because once you have a full derivatives market, bond markets, all the others which I can't reel off, because I haven't come from the financial space. It's what I'm learning day in, day out, but it's growing massively, and you won't be able to compete in a retail level against a decentralized financial model. It's just going to be so efficient, especially as so many more people jump on board. So yeah, it's going to be an interesting space to look at.
It's kind of it's having a similar conversation with a group of people a few days ago, where I've forgotten what the call was with now. It may have been a Women in Blockchain event or something, but one of the people on the call was saying about how it was that she was quite alarmed by just how the crypto world is replicating the traditional fiat world in financial services. And I said, absolutely that. So now you've got custodial services being created, you've got loan facilities being created, you're getting portfolios being created, you're getting the equivalent of CDOs created as well. And they're all developing at a rapid pace to replicate the fiat world, but without necessarily the constraints, the regulation, the control that was put in place when it happened in the fiat world. And then they wonder why it starts going wrong. And I think we're going to have a whole world of pain as a result.
Oh, yeah.
Which kind of, in a way, may not be such a bad thing. It goes back to my analogy that crypto is a bit like aviation. And we're kind of just past the Wright brothers in 1903 at the moment. And we're doing little hops. We're still learning. And it's like, oh, should we have 2 engines on here? Should we have proof of stake type thing? That you actually need the odd plane crash with a bit of blood being spilled in order to learn lessons, improve, and make things better. So, yeah, I think there are going to be a few things going wrong with DeFi, and it might actually be a good thing because it'll improve the behavior of the people in the markets.
Yeah, Mark. I agree. Hey, Mark. Oh, are you still connecting to audio?
Okay. So it's a favourite new phrase now, isn't it? Of hi, you're on mute.
Yeah, exactly. I'm going to call myself mute from now on. I can see I've still got Sarandant as my name, because my wife and I tend to log in and do various different quizzes and online events in the evening.
Okay. Go on, Mark. You can come off mute now.
Yeah, you're still on mute, Mark.
He's saying something. Maybe I'll take him off mute. Oh no, I can't. It won't let me. So Mark.
Oh, there.
Oh,
there we go. You got it.
Sorry, I said I've already been here for 15 minutes. I've just been trying to get the green screen working.
All right. Have you been listening in?
No. And then I had to try and log in and all this stuff.
Right.
It's practice makes perfect.
Yeah. Are you using an actual proper green screen then, as opposed to just a virtual background?
I've got green, and then because the virtual background won't work without a green screen.
On Zoom, it will.
Yeah, mine has a bit of a horrible time.
There you go.
Hey!
Oh no, what's that?
Oh dear.
That's pretty bad. That. Yeah, so
Yeah,
I don't use a green screen.
that's terrible.
That's pretty awful.
I
Yeah.
think it just
Yeah, I'm going to need to sort out my green screen, I think.
anyway. I can't get out of the office now because it's about the size of a cupboard in here, and I'm locked in with a green screen.
Yeah. So going back to DeFi then,
Yep.
Gary, incredibly interesting area, and what we were saying that there's a number of DeFi areas that are gathering steam. What was the last thing you said? Because you said something that I
Around the DeFi space, it was the way you're getting a replication of traditional financial markets, but being replicated in DeFi. So you're getting custodial services, you're getting loans, you're getting CDOs, you're getting portfolios and everything. And so you're going to end up, because they're not being developed with the same rigor of traditional financial markets that did those things, you are going to get the odd crash. And
yeah.
you're going to get the odd blood spilled, and that's what will then lead to improvements in some way.
Yeah, that's what I was thinking. I am not invested in the DeFi space, and I think everyone needs to be incredibly careful because it's all smart contracts that haven't really been proven in the test of time, and it's only a matter of time before you're going to get a smart contract that breaks and bleeds, a few hundred million or billions. It will happen, but then you've got to kind of look at the trade-off between that and the fact that a lot of traditional financial companies have been fined for, helping with fraud or, Mexican cartels or changing the LIBOR rate or PPI or, and all of these, even JP Morgan, I think, just got slapped on the wrist recently again. You've got the traditional financial sector that is actually committing fraud, or you've got the DeFi space that is not committing fraud, they're just doing it a bit differently and they're experimenting.
Well, it's a bit like, do you want to be involved in a market which has got out and out corruption and fraud and is regulated, or do you want to be in an unregulated market where everyone means well, but they've got a degree of naivety and lack of experience? It's like, which way would you like to lose your money? Would you like to lose your money through fraud or through someone's naivety? The end result's the same, you lose your money. And that's where I certainly urge caution with people around this at the moment. Because I think that there was a thing in the paper the other day, again, the FCA and City of London Police talking about how much crypto fraud there has been in the last 12 months. And it was something like £27 million or something. And again, it was like that's a fly in the ocean compared to how much fraud is committed on a daily basis in the formally regulated markets.
Yep.
Yeah. Mark, have you got into crypto yet?
No, I've been much too busy with playing with drones and all this other stuff.
Okay.
We
will get you a crypto wallet one day.
Yeah, it was, I probably would have made a profit if I'd actually managed to find my password early on, but yeah, that just kept putting me off, didn't it? Because it said, go home to your laptop and find your password again.
Yeah, because it was saying before that Bitcoin's been taking a bit of a journey last couple of weeks. It's certainly crawling up again, and it did quite a blip a few days ago where it went up just under $600, I think it was, and then it dropped down by more than $600. So on 9,200 to 10 or something. So it's a good few percent rise and drop. So there's definitely opportunities there, but you do have to be careful. So
yeah, when it went up so quickly, I could see there was a lot of longs. And as soon as it went over 10,000, a load of people thought, right, this is the last time it will go over 10,000, put in a load of longs, and I think a lot of the exchanges, they tend to like to cut the longs down, and when the market is shorting, they like to pump it up. So a little bit of manipulation, I think, in the markets, because we had that kind of Bart Simpson pattern, didn't we? Went up and then went straight back down. So that's kind of wiping out the shorts, and then wiping out the longs.
Yep.
And that's where the exchanges make their money.
Well, this is the whole thing. It's like a casino, isn't it? That at the end of the day, you take your commission irrespective of whether people are winning or losing. And that's where exchanges do very, very nicely. If they make it on their margins, as long as the market's moving, they're happy, they're making their money.
Mm.
Well, I was just going to pull up the Bitcoin stuff for a moment to just see what's going on currently. Because it does seem to have been a bit of a wild ride over the last few days, and then seems to have settled down again.
Yeah, I spoke to someone during the week, actually, that was saying that they're seeing that the minor capitulation is very much slowing down. We've had a little bit of that over the last couple of weeks, post-halving, but that is starting to calm down. So there's going to be slightly less sell pressure. There's still a lot of buying pressure, especially through Grayscale. They tend to be sucking up quite a lot of the spare Bitcoin at the moment. So the OTC desks are starting to run out. And so that's when we start to see, the start of the bull run.
Yeah, and it's something I saw someone the other day, because they were saying, well, at the moment, with the price of Bitcoin dropping below 10,000, it makes it financially unviable to actually mine it economically. And I was saying, yeah, but that depends on how much you're paying for your electricity. And for some, particularly in China, they're paying hardly anything for electricity. And so someone produced a paper on the average cost of mining a Bitcoin block, and it was a complete. There's no point of it, because it was assuming that you actually pay full retail price on the price of the electricity, whereas the reality is most of them don't.
Electricity is by far the key one. But it also depends on how efficient your air conditioning is, what geographical region you're in, how efficient are your actual ASICs and stuff like that. So there's a lot to take in. There was a big mining podcast that was on YouTube about a month ago. And they were saying that the break-even price is around about 7,000. So they're okay at the moment, but it really just depends. Those were ones with kind of efficient, mining capability in real good jurisdictions.
Okay.
There's been a lot of discussion around movement to Texas, because they have too much power there, and you can set up a kind of a mining facility quite easily, and Layer 1 are currently doing that with the support of A16Z, Andrew Horowitz' company. Yeah.
So it's interesting. You look at the price at the moment, it definitely does seem to be on a gradual upward trend. But then I was using these charts the other day to show how it is that if you look on the daily charts, you'll see one trend. I mean, clearly on that one at the moment, it's obvious it's rocketing up. But then if you look at the hourly chart, it's actually going down. And if you look at the minute chart, it's going all over the place type thing. I don't think anyone's really sure just yet. And it's as you say about the halving, I think things are still settling down with that in some ways.
Yeah, traders tend to take a lot of indicators, and they are just indicators. They don't tend to use the 1 minute, the 5 minute, the 10, 15 minute. It's more like kind of the even more kind of like the half hour or the hour candles. But when all of those different time frames coincide to show, it's a bull run or it's a bear market, that's when all the traders kind of pile in. If you've got the same indicator on the the 4 day and the 2 day and the 1 day and the 1 hour, all telling you the same thing, that's when you get real big excitement.
Yeah, because for me, looking at it, there's the potential this week it might go anywhere up to 10.6, and if it does go up above 10.6, then that might be the point where it never returns again, and it just keeps going up from there. Because I know I was on a webinar a week or so back with Tim Draper. I think were you on that one as well? But he was being quite bullish about it, and then there was a call a week later, and again he was saying the next couple of years he's a firm believer that Bitcoin's just going to keep going up and up.
It is what it's done after the last two halvings. So it might not do it the same again, but there's quite a large likelihood, especially considering that institutions in the market are actually buying far more than is available. So at some point, the amount of Bitcoin that's there that is available means that these larger institutions will start buying straight on the market, not through OTC. So that's when you see the huge price spikes. And then you're going to get FOMO, especially from hedge funds and other institutions. But the thing that really excites me is that you just need one small country and their central bank to say, right, part of our reserves are in Bitcoin, and that will create FOMO across all countries.
Yeah, I think you're right. Something like that, or the other one I'm seeing a real interest in at the moment is stable coins, and about what growth they could potentially lead to, because they could provide another entrance channel with the whole crypto thing. And the thing I'm finding fascinating at the moment about stable coins, because I've been trying to understand them for the last couple of years, so I've read a fair amount and I've met a number of people about them. And I was at an event a few days ago, or a web event as they are these days, and there were, I think it was 3 separate presenters talking about stable coins. So clearly it's an in vogue term in there, and none of them got it right as to what stable coins actually are. So it's this whole thing. You've got traditional financial services people. So
what did they get wrong?
Sorry?
What did they get wrong?
Well, they were insisting that the stable coin is always pegged against a fiat asset, which is not necessarily the truth. And it was interesting that one of the examples that they gave is a really good one, in fact, the name of which escapes me though, where they were actually talking about how well adopted this particular stablecoin has been adopted in somewhere in South America. And they're extolling its virtues about how it provides the price stability for when you're buying and selling things and everything like that. But when you actually look at how the stablecoin works, it works a bit like MakerDAO, where you've got the crypto is backed by another crypto, which is algorithmically managed to maintain stability. So whereas the likes of Tether, where in theory you've got a 1-for-1 relationship between one USDT and $1 US, even though I know they haven't actually got the reserves, with this particular one, and the name escapes me at the moment, it's actually algorithmically maintained as opposed to having a fiat-based thing. So all of them were talking about stable coins are all stabilized against fiat, whereas the reality that sometimes they're not.
No, you're finding stable coins that are now a basket full of currencies as well. They're coming onto the market. You're finding stable coins being pegged to gold. MakerDAO is starting to look at other different assets that you can actually peg stable coins to. So that's, you could actually peg an invoice to a stable coin as an asset. In MakerDAO, that's what they're thinking, which could open up a whole myriad of opportunities. But what I've also been looking at definitely is Tether. Tether's been in the market, for the longest. It's definitely got the most liquidity. It's definitely got the most spread. Newbies come in and go, oh no, Tether's going to bring the market down. It's going to be, and that's not really the case. It's been around for many years. It's basically the whole world, especially China. USDT is huge in China, but it's the whole world wanting dollars.
Yep.
And the fact that everything is denominated in dollars, and we've had this absolute crash where everyone is trying to offload assets for dollars, and even the money printing in the US is not kind of filling the bucket up because everybody is, flying to dollars. USDT is providing a really good way for people all around the world to get quick access to dollars that they can't get through the normal financial system. And that's what they think is stable. And at the moment, the dollar is strong. Just wait until it turns the corner. But I think stable coins are going to be huge, absolutely huge, because you are going to need a little bit more stability than the volatility of Bitcoin and Ethereum. And it's going to be very easy to switch in and out of them on these, decentralized platforms. So yeah, I think stablecoins are going to be absolutely huge. In fact, they could even be bigger than Bitcoin itself if people start realizing that's the easy way to get US dollars in this market.
Well, I think that's it. And again, it comes down to it may well end up that crypto is used in a way that is different from what people originally envisaged it. I always use the SMS analogy. That SMS has been an amazingly popular and successfully adopted messaging platform that was never intended to be a messaging platform. It was meant to be a telecoms engineering capability, but people adopted it, people used it in a way that was different from what it was designed. And I think it's the same with crypto. I think things with stable coins and that may have never been originally envisaged by the Satoshi white paper or whatever. But if that's the way people start using it, that's the way people use it. So.
Well, it's also a very good way of getting into the whole crypto scene anyway. And the fact that you can get 8% interest on your US dollars now in crypto, you're going to find a lot of people, a lot of retail consumers will eventually find that it's much better to store US dollars in crypto than it is in just your normal bank.
Well, you've got the thing again, haven't you, that you carry the risk at the moment that at some point a government or a bank may come along and either sequestrate your assets, give your account a haircut, or limit access. I was trying to think where it was the other day. They were saying because of the current virus situation that they're limiting withdrawals to a certain amount per day. And again, it's like, hang on, this is my money.
Exactly.
And you're not letting me have my money.
Yeah.
When I want it, you're only letting me have some of it. And it's a completely arbitrary type thing. So, yeah interesting.
So a friend of mine made a lot of money in crypto and decided to buy a house. And it took 9 months for him to argue with the bank as to, it was his money and it wasn't illegally gained and it wasn't fraud and he'd save this all up. It took him 9 months just to prove that the crypto was his and that he could afford to buy the house, let alone all the other, time building up the mortgage and everything. But yeah.
Well, that's the whole thing around source of funds, because this is something a lot of the crypto people still don't realize. That okay, even if you can prove stuff like this is effectively virgin crypto that's come from an initial mining type thing or whatever, banks still have an obligation to track down source of funds, KYC, anti-money laundering, CTF, so counter-terrorism fraud, and also the one that trips some people up and they're just not aware of it is the Proceeds of Crimes Act, which unless you can prove where you've got the money from is legitimate, puts you at risk at the police knocking on your door saying, where did you get this cash from? And they've got a legal right to do that. So, yes, interesting. So we shall see. Well, it looks like no one else is going to join us today. And I think
I've been deemed to cook dinner, so I'm about to leave.
Okay. Well, in that case, I was going to suggest we call it a halt for today and say thank you both for joining in today.
Right. See you soon, Gary.
Hopefully see you again soon. And now wash your hands.
Take care, guys.
See you around, guys. Bye now.
Bye.